Global investment banks are cutting their forecast for China's economic growth in 2025 as trade tensions with the US intensify. A Reuters poll now predicts China's GDP to grow at 4.5%, down from last year's percent and below. This comes amid reports that China has halted Boeing deliveries amid escalating tensions. The shift follows President Trump's announcement of steep reciprocal tariffs on April 2nd, which have risen to 145% on Chinese goods by April 11th, effectively placing China under a near-trade embargo. UBS estimates these tariff hikes will knock more than 2 percentage points of China's GDP growth, with exports to the US expected to fall by 2/3 and overall exports dropping 10% in dollar terms in 2025. As external demand weakens, Chinese officials are expected to shift focus to domestic stimulus. City forecast fiscal support of up to 1.5 trillion yuan or $205 billion alongside cuts to policy rates and the reserve equipment ratio. Meanwhile, Goldman Sachs warns that 10 to 20 million Chinese workers involved in US-bound exports could be directly affected. The combination of punitive tariffs, falling exports and global slowdown is seen as a major risk to China's labor market and industrial base. Economists caution that even with exemptions, inflationary pressures and supply chain shifts will weigh on China's trade position throughout 2026. Businesses are also facing the consequences of the rising trade war. Reports now suggest that China has stopped taking supplies of Boeing jets. This comes as a severe blow to Boeing, which has been facing multiple crises since 2024. China is expected to account for 20% of the global aircraft demand, and in 2018 accounted for nearly a quarter of the plane makers' total orders. Other industries are also bracing for impact as retaliation mounts. Meanwhile, the US economy is not immune. According to economists conducted shortly after the tariff escalation, fourth quarter US GDP growth is forecast at just 0.8%, down from 2% predicted in January. This marks the slowest pace since the pandemic. Recession odds have also doubled to 45%. Inflation expectations for December 2025 are up nearly a full percentage point to 3.6%, driven largely by rising import costs. Tariffs are expected to subtract 1.2 points from US growth and raise unemployment to 4.7% by year end. Economists warn that policy volatility and persistent trade uncertainty could further dampen consumer and business confidence in both the countries.